Come on now, you already know what it is. Come on down. Come get them Hollywood trust. So I had a lot of people asking me lately about order blocks, and it's crazy. It's crazy to me before I even understood the supply and demand in general and how in the moment or in the candle supply and demand actually worked. You kind of have this vague you know how to trade it if you're really good, but you have a vague idea of where the specified supply and demand is being generated in the moment, in the time frame that you're looking at. And so I'm gonna go ahead and help break this down. I got a couple guys that really want to do a deep dive. I'm gonna use charts that I don't have marked up, and we are going to just dive into what these pivotal zones actually do in the time frame that you're on. They call them order blocks. But this is just to me, this is just more specified supply and demand. And it's, to me, incredible that there are so many styles of trading and so many ways that traders look at the market, to where people don't really even notice the peculiarity of what price does at these places. So let's go ahead and start with British pound, Australian dollar. I do not trade this chart. And to me, this is how I study. I look at charts sometimes. Sometimes I'll choose a stock, or sometimes I'll choose coffee or oil or something like that, things that I don't even trade. And I'm interested to see how the blocks and pivotal zones work in these pairs. And so let's go ahead and dig in, shall we? The first one I notice is this is a downtrend right here. This is a downtrend. So all of your bullish candles will, once they get traded through back to the sell side, they will be used as a bearish order block or a supply zone. This is a supply zone, is basically saying that people tried to buy here and then they sold through that buy zone, and now those orders that are here are trapped and people want to get out, and therefore it supplies orders, right? It's filling buy orders. So as buy orders actually come into this zone and the price comes in, they have either auto trigger to get out or manually triggering to get out at either break even or a little bit in profit. Here it doesn't even look like these people got into any profit in these positions. They wanted out because it's a downtrend. So you don't expect for it to come through, wishful thinking, but people who are smart, they just want that break even from the candle that they got in at. And so this is the theory of supply and demand, and this is how you can use specified candles as supply and demand. And this is a specified supply zone, or resistance as they call it. The supply becomes resistance in these type of zones, right? And so hopefully you're following the theory when we start going forward into the next two charts that I want to use for this expose of true supply and demand. So right, boom, and then you get more of these order block zones in here. Not as many. I would actually take this and mark this off as a rejection block. I have a few blocks that I'll use as I'm doing this, and you see this is a rejection block, and you can see where it uses the 50%. It likes to use the mean threshold of these blocks. If you really pay attention, look at the 50% of this wick right here, and that is a rejection zone. You see it's respecting that 50%. See, people who trade supply and demand don't really key into these particulars. Always this particular is always a 50%, a 25% zone inside of these blocks, inside of these very candles, and this is the daily. So just imagine if you had this marked off, this area here, and usually I'll use the top block, but you can use complete rally zones that got traded through. If it was an impulsive, like this was an impulsive buy and an impulsive sell, you can use, this is still mean threshold. As you see, it did interact with this zone still, it did still interact with this zone here, right? And this is still a supply zone, and even more particular, it interacted with the top candle of this zone, like I just mentioned. And where did it interact with this top candle? It interacted with this top candle right in the middle, right, of that mean threshold, or the powerful area of that candle block, which is the body in the middle of it. You can see that. But this is just a small example of how you mark these up. In a downtrend, bearish pivots will be stronger and they will have a higher supply inside of that zone. There will be a higher supply in a bearish pivot in a downtrend. And so again, let's go ahead and terraform this chart. Let's just say you took your profit down here. If you went into that sell, you took your profit down here and you were waiting for the next bearish block to be created. You would use this block right here. I'm going to change this to a bearish block right here. And as you see, as this price comes up to this block, it uses the what? The middle of this block to show body respect. Once you see that body respect, boom, you are in that to win that. You will target the lows once again. Let's just say you got in on this day where it showed that respect right here. You would have been what? 674 down to about 300 pips in a few days. I mean, dude, you can eat off that. People who like to swing, you can eat off that. And you know that your stop will be protected by what? The new block that was created out of that zone, right? This is a new block. I like to use bodies for the most part, unless it has small wicks, top and bottom, then I'll use the whole candle. But if there is a long wick, I will use the body because I don't expect it to trade through the middle of this body. So you set your stop loss up at the top of this body. That is a pretty hefty stop. What's that? I can't do it. It works, but yeah, I guess so. I forgot how you do it. Yeah, there it is. It's your shift, right? That's crazy. Anyway, this is just, I don't want to go into particulars, but yeah, you set your stop up here, and then boom, you target your lows. You can target your lows right here. As you can see, it did not do anything until it hit that low a few hundred pips below, and boom, you are in and out of that trade. What is it? 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16. Yeah, it would have taken you a few weeks, 5 10 15. That's 5 days in a week. So it would have taken you a month, to make a smooth 300 something pips. But I mean, the average trader, of course, your traders that know stuff like this, they will be able to come in and out of the market in that lower time frame, 4-hour chart, hour chart, and use these techniques to be getting, 60, 70 pips at a time here and there throughout the week. But your average trader is not making 100 pips per week. Most traders, they're going to have about a 25 pip a day goal. People who are modest, who just want to get their pips and go, they're going to have a 25 to maybe 50 pip a day goal. 50 pips on Forex is very difficult to achieve if you don't understand these principles already. So, again, here's another order block, right? And as these order blocks keep generating, you keep pulling your order block in and down more and more. And what do we see? We see more order block respect. So once you get out of this trade right here, targeting this low, you have another low to what? Target. So boom, you get respect of the middle of the new order block right here. Some people might say, why don't you use this pivot right here? And this is This is some of where everything starts getting really particular here. This is more of a proportionary block. There's a stretch here, and then it goes back to that. It doesn't sweep any of the previous days. See where this one swept? This one swept these liquidities out of these days here and then pivoted. That means it was a rally that got shorted through. This is not a rally. This is a retracement candle. You got a rally candle from here to here. That's a rally, and then a bearish pivot. That is more true of an order block. I would mark this off as a propulsion block. We expect these to get traded through because it's a temporary correction candle then traded through. So it's not as strong. That's not what you would use. You would expect that to get traded through to the actual OB itself that swept and then traded through. Just like this one, rally, 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 rally. Swept all of these candles, swept. Even this one got swept and then got traded back through. And whenever stuff like this happens, whenever it comes back to a block, a lot of people, this is the revisit of a block, but a lot of people would like to see this block be created and then traded back into. So it did happen. It traded out of it here and then back into it here. It did trade into 50%. Always, when it comes to an immediate revisit, you want to see the 50% interact with it like this. It traded out of it, 50% interaction, and then you can go from that. If you want that short confirmation, you will use the 50% of that block. All right, and so this did happen right here. The 50% of this new block did get respected. Boom, and then you target what? Your low. That is just the easiest way to get into a trend, a retracement, and then continuation, retracement, continuation. There are smaller moves that will happen. For instance, off of these blocks. Well, not smaller moves, but more distinct moves that will happen off of these blocks, like this one here. This one traded, you hit your stop loss, boom, you got in. It took you 1, 2, 3, 4, 5. This one was a little faster than your previous one. It took you about a week and a day to hit your take profit. You would have gotten about, let me see if I can do this. You would have gotten about, what's that, 275 pips in a few days. What's that? Yeah, about 200 and something pips in a few days. Man, that's an easy weekly goal. That's easy. And of course, it's not going to happen at the beginning of the week and at the end of the week. This candle happened on a Wednesday and a Thursday. Wednesday and a Thursday was when your trigger and your Friday. So throughout from that end of that week to the next week, to the next Friday is when you would have hit the low actually on the Thursday of the previous week, next week. So boom, your TP is smashed. Then you wait for your next, you're in a downtrend. So you wait for that correction. Boom, up to where? Up to the block. Boom, we manipulate up into this block. That's what I call manipulation to the block. Boom, you manipulate to that block. It was a more acute transaction at this block because you did have what I call this a pending order gap, because it moves so fast. It doesn't have a chance to trigger all those orders. And so they call it a gap. And it's just a pending order trap, really, where there's a lot of pending orders in this place right here. There were a lot of pending orders that absorbed the price in this area because the price did not get a chance to wick that body right there. And so you just had a faster reaction to these, and you had a compression block as well right next to the order block. So this is just a different storm of a reaction. And you have a mitigation wick right here. This mitigation wick, basically people rallied, like I always say, people rallied here, and then they got traded through. So when the price does come back to that zone, people are going to be wanting to get out, plus the untriggered orders being triggered, plus your entries happening at the block. Super acute reaction. If you did get into this, you can use the lower time frames. Obviously, you always want to use your 4 hours, your hourlies. find a smaller order block within here, and this goes for every time frame. So you want to go down to your hourly and find the same interaction. You want to find the hourly that went up, and then you want to see that hourly candle come back and get traded through to the sell side in this case, and then you want to go in on that trade. And that's how you use order block inside of order block inside of order block, and just like you got your hourly, you want to sometimes go to that 5 minute and just confirm. You can set a tighter stop sometimes, and you find a little 5 minute 15 minute order block, and you can set your stop beyond that order block, and you will be in the money, right? You get out where? Right there. So you trade this one. This one is going to go for about 3 days. 4 days on a Thursday consecutive. Boom, you will be getting out of this position for 300 and something pips, around 300 pips. A few days later, you are consistently making pips like this. Consistently, if you are a swing trader, you do not care about the news. You do not care about anything that's going on, because it do not matter. The news do not matter. Maybe interest rates. You definitely want to pay attention to interest rates. But other than that, the news will not matter. The news will just help you play into these narratives, because as this higher time frame dailies and weeklies start popping up, it does not matter what the news is. The news is not have enough liquidity to deal with these higher time frame order flows, right? Then you have a dramatic sweep down here. As you can see, as that dramatic sweep happened, this was a weekly time frame event. You can bet I'm not even going to go to the weekly, because I don't want to get into a conundrum. But this order block right here is just, it's not even worth even trying to mark up, because once this whole rejection zone got hit, it was just what it was. It was just what it was. Once this rejection zone happened, there was nothing else that was going to stop this or trade back down into this zone. It grabs so many orders, and that's what liquidity is. If you don't understand what liquidity grabs are, it grabs so many longs down there. Once this happens, that it just delivers them somewhere, right? This was the nearest place for delivery. This was the most powerful bearish pivot that had the most orders involved in it here and above here, and a slight imbalance above here as well. And that was enough to kind of halt this big ass move to the buy side. There was another thing that took place here, which was, this is a bearish block, right? This was a bearish block. I did not mark it off because we kind of got into the idea of everything, and there was something more particular to mark off here, which was this bearish breaker zone here. This bearish block had gotten broken, right? We call this a broken block, a breaker block. It is a block that was a bearish pivot. It collected so many orders that it just smashed through that zone. If you were in the idea of coming back for retracement and then entering again on this, you may have been dismayed, but you should have expected that this move was way overextended and collected too many orders for your trend to continue down after this. After this type of momentum in either direction, you will not expect your block to hold anymore. And then this was not even a full block. It was such a small compressionary zone. It was not a full bodied block like these. So those are, if your trend does get reversed, you could not expect enough volume to be here. Anyway, boom. You traded through this. You will mark this block off as a broken block, or what they call the breaker block. So this block was broken, and you will mark that off and bring it forward. You see why over here, right? So at this point, we are bullish. We are bullish. We have broken our first bearish block, and then we have a second bearish block broken also as well right here. That was it translated into a new bullish block. These were more propulsionary, but you did get a double sweep, and that's what I like to mark my blocks from. I like to mark my blocks from a bullish a double sweep at least, or a triple sweep of a block. Boom. So we are back to our bullish pattern here. Boom, 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 boom. This block held, right? Boom. And of course, we got a new block here. Boom. Respected the body of this block. This is support and resistance, my friends. This is supply and demand. This block becomes a demand zone, right? Boom. Trade it back down. Boom. Trade it back through it. Boom. These people want to get out of their cells, and they want to, they're going to supply longs. They are demanding to get out, and they are demanding that to get in long right here at the block, and they are taking this back up. Boom. You don't even regard any of this anymore as any entries for shorts. You don't regard any of this. Once you get disrespected on this end, you don't regard any of this as any type of entries anymore. These are just now targets. Now all of this is just now targets because we are on the uptrend. So boom, you target anything. You can target this, you can target this, you can target this, you can target any of this. You can even target this block right here. If you are targeting far away beyond your breaks, you want to target the wicks or the bodies of the block that is to be holding the range, which is your supply block. This is your supply block in this case. So you are going to be targeting this supply block right here, or targeting any of this, maybe this if you want to be safe. But if you want to TP1 and a TP2, maybe those are your TP1 and TP2. TP3 would be the ultimate height, which is up here, but your TP2 could be down here. Those are about 100 and something pips away from each other. So that is a smart TP1, TP2, TP3 situation here. Then, right, this bearish block sent the price back down. Now, if you wanted to, you could use this bearish. You have to be very skilled to use this bearish block to trade back down, but you would only trade back down to your nearest bullish block, which would be something like this, maybe even the wick of the bullish block, or maybe even just this imbalance here. That would be your TP. If you did want to trade, because this did create a bearish block, this white candle traded up, traded back down, and it created a bearish block, you could go down to the hourly and trade a bearish block in that hourly. You would only target this. That's still good for a couple hundred pips as far as I'm seeing. That was still good for about 200 and something pips right there. What was that? Yeah, oh man, about 300 pips right there, 300 something pips. And 2 or 3, what is that, 4 days from a Monday to a what? To a Monday on Friday, to a Monday to a Friday. Something like that, right? Yeah, Monday to a Friday. And you have to be really smart because you know you're in an uptrend, so you can target imbalances. That's an easy target. This is a very difficult place to trade because you didn't quite get, to your bullish demand zone, to your support zone. You didn't quite get there. So this would not be something you would want to target the height on yet. It's still trying to establish liquidity. This is just creating liquidity, right? In these zones, you might want to switch to a different chart other than GBP odd during a time period like this. Unless you believe you are super skilled, you can use that 1 hour and that 4 hour supply and demand bullish and bearish blocks to get you back up again. Boom, the 50% of this block, also the 50% of this wick could be targeted. I would not target heights here. I probably would only target bodies, really, to be honest. And I would use the 4 hour and the 1 hour to target these. But let's go ahead with our daily experimentation. Boom, we come to this rejection zone right here. And then we trade back. We sweep, we sweep, we sweep. We finally completely reach our demand zone in this, block down here, and we are on. Boom. Once we get something like this, we start getting things like this, we really want to go down to that lower time frame and find the same type of situation. A lot of people, we're going to probably go down to a lower time frame in the final chart, but I just wanted to show you this is how it is done. And so this is just the basic way of how it's done. Boom, you come back. You always want to wait for that manipulation to your powerful zone to see if that zone is still strong, because we are bullish right here. You want to see if that zone is still strong. So what you want to do is you want to go in right here. Boom, you got you a new block, right? Let's go ahead and I'm just going to transfer this over. We got us a new block right here. It didn't quite manipulate into this. It didn't quite manipulate back into this to trade out of, but this was already a revisitation of a zone. So all we do is just wait for that order, that hourly order block doing the same thing, right? An hourly sell candle will be in here somewhere on one of these days, right? And you see after that, one of these, there would be hourly candles in here that did not get traded back through. So you can set your stop beyond this hourly candle's body right here, and then you can just go up and just target the heights. This is when you can target the heights, right? This is why I also set a TP1 at the bodies, because this is a bearish body block. It is a strong, it's not an engulfing, but it's a strong two-bodied balanced price right here. So this will kind of stop the price. As you can see, you expect this, and once you understand where exactly your unmitigated supply in this type of area is coming from, it's from this candle. It's not the zone. It's not the zone, ladies and gentlemen. Supply and demand zones are for the uninitiated. That is the old school technology. The new technology is really understanding that this very candle, right, this very candle right here is being used. The body is being used, right? And it's just eating this body. So right here, you can see it's eating this body. You can expect it, because it broke this structure, right? You can expect it to push price down, and not completely though, because we are still bullish. So you expect it to push price down into a discount array, right? Discount is beyond 50%. This is a whole nother video. I'll probably go through discount array and premium arrays. People for supply and demand traders who don't really still understand what algorithmic supply and premium and discount means. We'll go through that in a later video. So yeah, so you expect price to push that back down to a discount array, boom, and then you fly back up. So you can still target a TP1. You went in here, so you already up, a couple hundred pips, about 200-400 pips already in a matter of days right here. Yes, you hit your TP1, that's a couple hundred pips, and then maybe you can have a TP2 at the height, something like that, to get you out of your remaining positions at the heights. And that's how I usually handle it. I handle it with a TP1 and a TP2, target the body, then target the height. If we're in an uptrend, we know that it's going to do a little dance. It's going to do a little Chris Brown right here, and then it's going to get you where you need to go. Boom. So we are still bullish. We did sweep a lot of liquidity though. All of this liquidity right here, all of this right here, because now at this point, we are reaching into higher time frame SMC, right? So once you sweep your lower time frame into, this is a higher time frame array, and there's a more order flow here now that we are in this array. So now we are getting back into the bearish higher time frame type of idea, where this was bearish, then up, then bearish, then up, boom, boom. So now we cleared a pattern of the bullish. And so we need to go back and test. Now that we have gotten past all of our lower time frame bullishness, we are back into bearish higher time frame territories. This is just stuff that, once you start really understanding, again, premium and discount, let's just bring this up to right here, right? And so you are in the premium array, right? You are back into the premium array of a higher time frame premium discount array. And that's basically what this ends up being, is just you are now in a full premium array, right? You are back above the 50% retracement, and you are back into bearish zones. You are still bullish, lower time frame, but now you need to absorb these orders, right? You need to absorb these orders, and it needs to deliver these orders back into support. So now is when you start talking about being able to trigger some of that previous supporting array. And this is all to be expected. Once you understand price on this level, supply and demand, untriggered orders, liquidity pools that have been left behind that need to be delivered. They needed to deliver this back into a discount array. So boom, we are going to go ahead and just try to measure what the discount array would be. Actually, this wick is kind of hard to measure that. Boom. So now anything below this 50% of this run up, let's just say this is the body run. We're going to call this a body run. That wick is just a rejection. It's just ridiculous. So we're going to measure that body run up. And in the body run up, there is a fair value gap. There is a gap of untriggered orders in this array right here. We did tap into a smidgen of those untapped orders on this day, on this Thursday, February 2nd of last year. We did trigger this. And so as well as the breaker region right here, you would expect that to be a strong boundary of a mitigation zone where people are just exchanging a lot of orders. You're in the discount array. What do? We create a new bullish OB, right? We create a new bullish OB, confirming that we are still bullish, right? And what do? We do not trade back below the body of this. We do not sustain any price action beyond the body and nothing beyond the wick of this. This is the discount array. It comes back above the discount array. As you can see, you can tell when your measurements are good when the price responds to them. And so the price is responding to this being discount array. It is liking this discount array. You have basically a whole bearish or a bullish order block array being built in all of these candles. All of these candles are being used. Once it goes above this candle, boom, you are never coming back. Once you get your displacement, this is called displacement. The price is displacing. It is not just moving, it is displacing, right? It's like when a big boat moves through the water, it is moving that water, it is displacing that water. It's not just splashing that water, it is moving the water, right? So this is displacement candle here. You do not expect price to do too much trading back through this type of displacement after an accumulation, right? Accumulation, manipulation, distribution, right? And so coming off of this new supply zone, of course, a lot of supply and demand traders may get kind of confused sometimes when you come, because you might have your supply marked off down here, right? Or here, or maybe here. If you, I don't know, to me, if I was a supply and demand trader, this kind of zone would kind of mess me up a little bit, because this would, I guess this is all could be seen as a supply zone. And that's where it gets kind of hairy with supply and demand, because you don't really know. But once you understand where this in the moment specified supply support is coming from, or demand support is coming from, you can trade off of these areas. Once you understand your premium discount, your PD percentages, you can really take advantage of this type of price action, right? And so on and so forth, so far to the new day of where this price is trading this year. We have a nice bullish order block zone somewhere up in here that has not been revisited. We are bullish. We are super bullish, and we are not even testing any of these bears. We have been bullish ever since the stuff that we were studying back there, and we have not even been testing any of this. So we can expect this bullish block to hold. We can also expect this bearish block to hold as well. So this is our dealing, what they call the dealing range. This is our dealing range, and this is what they have to work with right now. Anybody who's trying to trade this pair, this is what you have to work with. We are kind of bullish, kind of bearish, but it will not matter if you understand where your blocks are placed, right? Like that, right? It will not matter if you understand where your blocks are placed. It is using, look, it hit the body of this block. It's not the zone. It's not a zone. It's the body of this block. It hit the body of that block and dropped, right? Thus creating a new body to respect, right? Boom, right? So it is respecting those zones. Again, we are using a PD, right? So that is your current dealing range PD, right? And so that is the whole range PD, and then you have your actual bullish array PD, which will be something like this. So this is a bullish push, and this would be the bullish PD. So it's trying to send this premium, larger premium, into the discount. And so that's what's happening right now, is just stacking bearish blocks until it gets to a discount array. It's gonna get to this discount array, and then we expect it to do what? Build a new bullish block somewhere up in this zone, because this is a bullish pivotal area right here that seems to be really strong. This area was piggybacking off of this area back here, right? Exactly. And where? To the 50 percentile of this block, right? Oh, actually, let me be more specific. This block was here. See that body, right? Boom, 50% of that. So this is the supporting array for this whole region, and that is the, what is that? And this is the resisting array for the whole range, for the dealing range for this whole region. And so that's what we're working with right here. We do have some gaps, some untriggered orders here that stop the price from going down. This was a new bullish array right here. So we can expect this bullish array to hold because we are still bullish. But ultimately, this bearish array right here most probably expected to win out for this lower time frame battle here, or I should say this lower range dealing area here. We would expect, because this was displacement, right? Displacement, boom, we had displacement here in this bullish array, this bearish array, then more slight displacement here. And so if we do get up here, we do expect it to travel to the discount range here, somewhere down up in here, down into the Fibonacci, what they call the Willis zone for you Willis traders. And then we should get a travel back up into the premium, and possibly smash all of this before we visit all of this displacement here, which is untriggered orders all up in here, right? In the form of what they call the bearish fair value zone. And so that's what we're looking at right here. Let's go ahead. This is a deep dive video. I haven't made many videos like this, but I guess you guys really want to understand this. So I'm trying to help out as much as I can. We are going to go to our CAD JPY. People love these JPY pairs. They are wild cowboy pairs. And we're just going to stick with the most recent price action that we can see on this daily. Again, you will see in the last example, Euro GBP, which is a very range bound pair because they share two of the similar economics in that region. And so we will scale down to the lower time frame on that pair. But on this one, we're going to stay on the daily once again. What do we notice here? We notice that there is just some crazy arrays supporting this price right here. We're going to say this is the lowest bullish pivot. So let's mark that off just to get us started. Let's go ahead and mark this off to get us started, right? Yeah, so it looks like, boom, we're already started on our bullish pivots. Again, we have inversion. We have gaps that are inverted, inversion gaps right here. I didn't really go into that, but this is probably a video for a different day. Sometimes I will mark off inversion gaps instead of the actual OB because the inversion right here, because it was a high volume of orders bearish that got disrespected this way. Boom, you expect it to come back into that zone to recover some of those break-even orders, to give them a chance to exit their positions. Once they exit their positions, the price is free to go. And then you just get this crazy upward momentum that happens in these JPY pairs. You know, anybody who trades the JPY knows how this goes, right? And so this probably bearish array, this bearish arrays is being overtaken here. Once these bearish arrays get overtaken here, they become a bullish order block. As we see, you know, it is sweeping the liquidity. Actually, this is equal lows. That's a crazy thing. I would say that this price wants to come back down and sweep these because there's a lot of stops right there. But as for now, these bearish arrays, this whole bearish array is also, this is a propulsionary block. It's crazy that this propulsion block is that strong. It's piggybacking though off of different arrays. It's not just a propulsion block, but it's a balanced price zone. But I will mark this off as a propulsion block. Boom, right there. This is a propulsion zone. A block is using this very block. So it's using a combination of this array, and this array to hold this whole region up. And again, a lot of supply and demand traders would be very sometimes confused when you don't have clear, this zone isn't a clear demand zone. It's not a clear support zone. It's just small pivots, right? So these candles can be used. This candle can be used. This candle can be used. This candle can be used. So these candles are being used inside of this push up as supply and demand. It is being used. There was supply and then there's demand, and there's supply and then there's demand. So once the supply candle gets eaten by the demand, it becomes a demand zone. That's how you spot in the moment demand zones. All right. So with those zones being created, you can use them to make entry decisions, right? Especially when you start stacking arrays, is what they call it, stacking arrays. So when you start stacking them arrays, you just expect price to actually respect them after that. So once you see it start respecting, then boom, you got new blocks, right? And so then you start stacking blocks, right? Like, let's just say this is the lowest body, and you start stacking blocks. So let's start stacking these blocks. So boom, now we got 2 stacked blocks, and we are respecting the what? The middle of this body right here. Boom. Right? So a lot of you people, you can start really, you know, seeing where to be apprehensive and really forecasting where, you know, you could possibly make this entry in these understanding these type of situations right here. This is also an inversion zone where a bearish triggering was happened and then it got inverted, right? So that was a bearish zone right here, a gap, and it's starting to get inverted by bullish inversion. Fair value, there's a fair value missing fair value there, and it found fair value, and then it just overtook that, and then you have bullish supply right here that was also being displaced. So now you have bullish supply inside of there, and this is just really, it starts getting really technical inside of places like this. But once you understand where your blocks are at, this was a bearish block right here, so you're expecting it to just, this is where you expect your consolidation. You expect your consolidation here, and you expect your bearish blocks to do their jobs to an extent, But once you get a sweep of all of this and a sweep of all of that, and you get long wicks, you can expect that you have many orders to be delivered that want these people who get in here at these. This is a higher time frame trader zone. So these people are not getting in and out of their positions. It is the smaller fish that are getting in and out of their positions as these blocks are being interacted with. These higher time frame fish, these whales, these swordfish, they are trying to swim. These sturgeons, they are trying to swim upstream to where they know price is going to go because they interacted with a higher time frame SMC. Higher, right? And then a retrace, higher, right? This was a higher low technically than all of this. Technically, the bodies, right? The bodies are sitting higher than these bodies. So boom, they're expecting to what? Go to a new height. And eventually, boom, they get to their new height. So once you start understanding, again, this is just going with the trend is going to be your friend always, but understanding your supply and demand, your support in your demand and your supply, resisting supply in these candles, you can really start making some good decisions here, right? And we really want to see price now next come down to manipulate what? This block right here. Once we get a manipulation of this block or possibly a new order block inside of this untriggered boundary right here, right? Then we can go into another buy. Once we see a new order block being formed either here or a manipulation into here, then we can start going into uncharted territories here in this Canadian chart. I think this is, I don't think there's nothing here to the left. Yep. We're going to use deviations most likely. Let's go ahead and measure this manipulation leg right here and throw a deviation up. You want to use your channels and you want to use your deviations when you don't have anything at the top of the chart, but this will be a different video. But just to give you a taste of what you can expect for deviations, boom, 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 and boom. So these will be your deviation targets, TP1, TP2, TP3. And you can expect these to be hit. This is what you would use when there's nothing to the left. As I put in my previous video, this is what you will use. Let's go to our last chart and wrap this up. Hopefully everybody's understanding what is happening so far. This is going to be the final boss of supply and demand. Look at this choppy ass chart. This is Quasimodo, head and shoulders, wedgies, bull flag, bear flag. This is everything all in one chart. This is the final boss of the supply and demand order block teaching, right? So a lot of people, they call this channel trading. Is trading in a sideways channel. And this is how you get along in a sideways channel. Let's do it. This is the highest bullish bearish pivot. So let's go ahead and just start marking off. Boom. Let's mark off the controlling block at the end of this zone, which is it would have been this body or this body, right? Previously it was this body, as you can see. Previously, let's just mark it off. Previously it was that body right there. And it did actually give a nice trade back up from there for a couple hundred pips. Not too many pips, right? In this pair does not really move like that. Not too many pips, but just understanding, right? Once you understand what's used, what price is using in the range, you can, it's a little better than supply and demand in a certain way because you can use the particular candle. And if you see that price is using and referencing that candle, right? Because that was the lowest closing body, you can try to make a great decision, you know what I mean, here. Even though once it got into the premium of this leg down, it did trade back down. So you always want to use a combination. It's always a combination of things that you want to use and it's always premium discount. It's always order blocks. It's always untriggered orders, right? Boom. As it got into the premium, you see what happened. You will expect this to happen in the premium. You hit a little propulsion block here, right? And so if you're actively, searching for orders in this is a very difficult, like I said, final boss chart for this type of specified supply and demand premium discount trading. This is going to be your final boss here. So these last few days, of course, into the new year, let's go ahead and mark off our untriggered order zone right here where fair value was not met, because we can expect this zone to be pushed back into, as well as possible new bearish order block being formed inside this zone. We do have a bullish rally into a pivot, so this candle and this candle can be referenced on the way up as well. It would be very interesting to see what happens when price gets to this very zone right here. Again, let's go ahead and monitor our premium and discount here. So technically we have not reached a premium yet. So without reaching a premium, this is the look at these freaking candles, mate. Sheesh. I mean, it could possibly use this. It's been using this, and it's referencing the middle of this. So, oh my goodness, look at this, bro. This is a mess. This is a mess. Look at this. Look at this. This is a freaking mess, boy. Oh my goodness. And it is referencing, it does not want to, you can tell that price does not want to come back down into this zone. After it traded back above this zone, broke all of this and came back, this is just retracement after retracement. It did a high, and it did a low, then it did a lower high, then it did a lower low. So it's in bearish SMC. But with the bearish SMC, you also have just order flow itself. And this is where we stand with this pair. This is when, all depending on how you want to trade, this is when you go down to your lower time frame and you really start trapping out your lower time frame order blocks inside of your higher time frame order blocks. And you can make smarter, more precise decisions like this right here, right? So we haven't been back to this block right here. We also are still swept that. So we have a new order block right here. And then you want to see what it does with this order block. The market is moving. So we want to see what it does with this very order block here. And take it from there. With this, we do have a bearish SMC, and we do have like some very bearish pivotal areas, something like this. This is a bearish. So we want to see it start disrespecting this. If you are bullish, you want to see it start disrespecting these bearish arrays here that are sending price back down. This is a very bearish rejection block right here, what you guys call a wick. Right here, this is a very bearish sentiment right here, but we are seeking, you can see price is seeking this premium right here. So let's just do a rejection block right here. Let's do a rejection block here. Then you can tell obviously that rejection block is still being respected here. And then we want to see if you're bullish from this higher time frame, bullish zone. Right. Oh, look at this. Look at this right here. I would have this marked out as well. This is a support. This is a bearish fair value gap that was turned bullish. So I would actually use this as a flip region. Yeah. I would use this as a flip region, or just an IFVG markup as well, just to denote, right, as price comes into it, it will be referenced. It will be referenced, not just the blocks here. There was also IFVG activity here, but this was the lowest. And obviously, and as well, this fair value gap right here was a displacement that was used. It's also being referenced by the price to not go any lower. So we can see it's building a bullish array here, and we are expecting this bullish array to eventually oversaturate price into this, beyond this. So if you set a take profit, you can set the take profit somewhere up here. There are heights up here as well that we expect. So like a TP1, TP2, maybe TP3 type of situation right there. You can also use your deviations to try to get you better. Let's just see if we can find a manipulation here. Boom, let's use the body manipulations here, and let's throw a deviation up. All right, so you can use your deviations to try to get you up out of this bearish flow. Is showing, because price is like a slingshot, and I will make a video of deviations next. I'll probably do PD next, and then I'll do deviations after that. That will complete the main teachings of what I use to monitor price. This video is 55 minutes long. This is a order block master class. You cannot say you do not know what an order block is after using this video to learn. All right, go ahead, hit that subscribe button, comment if you want to know anything, or just let us know how we're doing. And go ahead and subscribe. Don't forget to subscribe. We will have more teachings coming out. More masterclass videos like this will be coming out soon. As I would like to say, adios, amigos. Hasta luego.